Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Global Crossing Airlines Group, Inc. Please note you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I am very pleased to welcome Ryan Gopel, EVP and CFO of Global Crossing Airlines Group, Inc., which trades on the OTCQB venture market under the symbol JETMF and on the NEO under the symbol JET. Welcome, Ryan.
Great, thank you very much. Um, the global pandemic, and just to start off, was an incredibly disruptive event, and nowhere was that more prevalent than in aviation. Global Crossing Airlines Group was launched in 2020 to take advantage of those opportunities in both the domestic and international charter market. Active for over 2.5 years, Global Crossing has created a platform of 14 aircraft, 700 employees, and is poised to continue triple-digit revenue growth for the next 3 years. I'm going to spend the next 15-20 minutes explaining to you our story. Standard disclaimer language that puts through with regards to forward-looking information as it's presented. So what is Global Crossing? What is Global Crossing Airlines? A lot of people, when they hear about an airline, they tend to think through the Warren Buffett statement about losing money, and there's a lot of risk associated with it. What Global Crossing has done is we've created a business model that really addresses a lot of the risks associated with airlines and de-risk them in the way we approach our business. So what we are is we're a breed of hybrid charter airline. And what that means is we do not publish a schedule, we do not sell tickets, but as a consequence, we do not take fuel risk, we do not take load factor risk, which are two of the big risks that major carriers have. What we do is we sell the entire plane, we sell it in advance, and we sell it on a cost plus basis. So which means every flight generates a contribution margin and every flight is profitable, which is different than you might see in some of the others. There is a certain kind of customer that works with this kind of space. Most people can't afford to buy a whole plane, but there are many groups that needs a whole plane. So we approach groups. So this is a B2B model. So you don't see a lot of advertising about Global X. You won't see Global X in trade press. This is a B2B model, and we'll go through the kind of customers, but we're talking U.S. government, college teams, professional sports teams, tour groups, charter groups, corporate customers are kind of the core customers we deal with. The charter market has been expanding faster than the U.S. economy as a whole over the last 5 years. The volume of charter flights has increased on an average of 8% per year, and the charter flight industry is estimated to be approximately $27 billion. There's also been a general shift of the cargo markets towards air freight as consumers increasingly demand next day delivery. So we operate not only on a passenger basis, we also operate on a freight basis. We are continuing to execute on low-cost initiatives while growing our business. The fleet plan, we will discuss our fleet plan and the desire to add more flights. We've developed a training plan that allows us to onboard pilots. As you can imagine, pilots is a key part of what we offer and what we have. We have a maintenance plan, which allows us to create scales. We get more aircraft. We have a hangar facility that's going to be opening in the next 18 months. And we also have a management program for inventory. So who are we at a glance? Global Crossing Airlines is the fastest growing North American domestic and international hybrid charter cargo airline. And that's a lot of words. But what that means is we operate the Airbus A320 family of aircraft. We currently have 14 aircraft, 11 passenger and 3 cargo as of November 30th, and is projected to grow to 16 by the end of the year. And our target is to grow to 50 aircraft by 2050. We recently raised $35 million in August, which will be our catalyst for growth, which provides us the funding we need to grow as we're projecting to grow, eliminating the needs for short or midterm equity. We're projected to do $150 million of revenue, with positive EBITDA and EBITDAR in Q4, of which 95% is contracted. We do have lucrative long-term robust contracts and relationships in place. And when you think of the customer base we operate with, which we'll go in a bit, they tend to be resistant to any sort of downturn in the economy because most people who are flying with us have to fly, regardless of the economy going around. And right now, you hear a lot about pilot shortages. We currently have 125 active or in training, with another class just starting last week. We have increasing our utilization and block hour rates. The way I like to describe Global Crossing is if aviation industry is a fishbowl, and the scheduled carriers, the Deltas, the Uniteds, the Spirits of the world are the marbles. We are the water that goes in between. So we meet the demand. We supply we meet the demand that isn't being met by the existing operators, and we do it by offering flights when people want it, how they want it, at the time they want it. We believe, again, our business is selling the whole plane, so we do not take fuel risk. Everything is on a cost-plus basis. And we believe we have a highly attractive valuation with around a $40 million market cap. Looking at the team we have in place is an extremely experienced team. Our CEO and founder, Ed Weigel, has over 30 years of commercial aviation. He was the co-founder of United Express, Republic Airways. He was the founder and CEO of Eastern Airlines Group 2, which was launched in 2015. Myself, I've been in finance for 20 plus years. Prior to this, I was with another airline that we helped turn profitable up in Canada. David Dow is our head of sales. He's got a long career in selling, and that's basically what he does really well. George Hamrick, we call him Mike, chief of staff. He's had 4 careers, over 40 years of military and commercial aircraft experience. Fern Nadal, head of cargo, over 17 years of experience in the cargo operations. He's helped launch our cargo operation. And Indiara, our general counsel. Looking at our board of directors, Alan McCarter, who's the former SVP of FedEx, former minister to the FAA, and the former chairman of the Airbus Group in North America, acts as our vice chairman. John Quelch, former dean of the University of Miami Business School. Cordia Harrington, one of the founder and CEO of Crown Bakeries. Deb Robinson, board member for Via Rail and founder of Bay Street HR. And Alan Bird, former advisor and CEO to Canada Jetlines, former CFO of Viva Airbus, has extensive experience in aviation. And Andrew Axelrod, who led the financing, provided the financing in August for us. Is very experienced board, professional board that is we rely on and is providing a lot of support for us. If you look at what we've accomplished now, keeping in mind we've been operational since August of 2021. We launched the company in 2020. We got certified as an airline in 2021. And when you think about what does Global Crossing have, we have really 3 main assets that we've developed. The first asset is our certification. So we have what's called a 121 flag carrier. That's the highest level certification in the FAA. It allows us to operate throughout the world and within the United States. It's a key barrier to entry for any other competitor. But we've also augmented those certifications with additional certifications, including IATA OOSA safety audit, which is the highest level of safety, which allows us really to effectively operate for other airlines, which is a key customer group. Our EASA TCO, which allows us to operate in Europe, our UK TCO, which allows us to operate in and out of the UK, and Department of Defense certification, which allows us to operate for the Department of Defense. Since the second main asset, which is the one to the left, is recruited and retained experienced pilots, 120 hired and trained, another 30 or so in training right now. So we're continuing to grow that. And if you look at some of our historical results, we've made significant investments in our pilot training, and it's served to allow us to operate the metal, which is our third asset, the aircraft, for customers at profit. We currently have 14 aircraft operating under the certificate. Our 14th aircraft was put on the certificate last night. It's N630VA, and we'll start flying revenue today. We have another 8 aircraft to be delivered in the next quarter, in this quarter and in the next. Operational performance, what we sell, and really what is our core market, is we sell block hours. Now, a block hour, for those who don't know, is when a plane pushes back from the gate, the blocks have come off. That's the start of the clock. And when the plane gets back to the gate and the blocks go on, that's block on. So we sell those hours. We've operated over 25,000 hours since we started operations, and we're operating on average between 2,000 and 3,000 hours a month now. Again, we have full geographic reach, operating in the last 12 months. We've operated flights to 51 countries, to over 150 international cities, in addition to all the flights we've done throughout the United States. Who flies us? Who contracts an airline? Who contracts a company like ourselves? And we have effectively 6 major segments that we work with. NCAA sports, college sports. For this upcoming basketball season, we have 9 of the top 20 basketball teams under contract for the season. We fly the majority of flights for March Madness. We fly the majority of flights for bowl season, supporting colleges and universities as they attend and go to different bowl events. We do concerts. We did the Bad Bunny South American tour, Harry Styles, Lady Gaga, Bruce Springsteen. There's several others that we operate for where they'll take the plane for a month or 6 weeks or 4 weeks, primarily flying the cast and crew, which is a larger group, from event to event. Government is a large piece of our contract. We do a lot of work for Immigration and Customs Enforcement, Department of Defense, NASA, to name a few. That's a pretty robust segment that we're very proud of and we have a lot of experience with. We also operate for airlines. So because we're a 121 flag carrier, when an airline has either a mechanical, which means the plane can't fly, or has the ability, wants to expand their service and they don't have the metal to fly. And I think what we're seeing in the market today is there's several opportunities throughout it's called the Pratt & Whitney engine issue, where they estimate over 1,000 aircraft will be grounded over the next 12 months. All those airlines need those planes to fly, so they will hire someone like us to fly the flights. So we operate with TUI. In the last year, we've operated with TUI, Lynx, Avelo, Wizz, Allegiant, and Breeze on various routes. And what it'll look like from the consumer standpoint is they will check into a Lynx Air flight, they'll get to the gate, they'll get on, and all of a sudden the colors are a little different inside. But that's what we call supplemental lift, and we think that's a massive market for us, especially in the next 12 to 18 months, as you hear about engine delays, pilot shortages, and delivery delays. The other big segment we work with is brokers and tour operators. There's a significant broker network throughout the United States and the world, and a lot of customers will come through the broker network to us. We work with pretty much every broker in the world on that. And on the cargo side, we work with various customers such as HBO, U.S. Postal Service, IBC, Ascent Logistics to provide freight. We basically have converted freighters. We call them 321Fs that operate on the same basis we sell block hours. We don't sell freight. We don't sell freight forwarding. We just operate the aircraft. If you look at Q3, what we achieved in Q3, every quarter seems to be another record quarter. We closed our $35 million debt facility, which will fund our growth for the next 12 to 18 months. We signed LOIs for 2 additional aircraft and 1 additional 321 aircraft. We increased our pilot headcount from 60 to 120. We flew over 1,800 hours under a wet lease for TUI, one of the largest leisure carriers in Europe, and we will fly for them again next summer. We took delivery of 1 A319 that has been put in VIP configuration and is being used extensively for college NCAA sports. We have a third A321 freighter was delivered in late September and is now operating in revenue flights for us. We completed the financing and signed a lease for our maintenance facility to build at Fort Lauderdale Airport. And in advance of basketball season, we had booked over 1,100 hours in NCAA basketball, including 9 of the top 20 men's and women's basketball programs for the 23 and 24 season, and that's been continuing to grow since we released Q3 results. So how does this translate? So there's 2 things we need to look at when you're tracking our activity level. One is the number of block hours, which you can see on the left, and then the number of quarterly revenue. As you can see, Q3 was a big step change where we moved from the low 30 million to the $40 million range. And we projected to do over 150 million for the year. So if you're backing into the math, that'll be another step change in Q4. On the block hours standpoint, we demonstrated the ability as an operation to go from 3,500 operated hours to 6,500 operator hours. Keeping in mind, Q3 is always going to be the highest volume of hours because that's the high volume summer work, whereas the Qs 1, 2, and 4 tend to be lower volume, high charter work, which is what we're into right now. Looking at our Q3 results, again, 42 million in revenue, 7.6 million in EBITDA. One of the reasons we talk about EBITDA, and it's a unique kind of to aviation, this metric, is you basically take your EBITDA and add back the rent of your aircraft. The reason you would do that is if you owned all your aircraft, your cost for that aircraft would flow through depreciation and amortization. If you lease all your aircraft, it would flow through the R, which is aircraft rent. So in order to compare one airline to another, we use the metric of EBITDA. Treating and from us, we've been positive EBITDA for 5 quarters now. EBITDA was slightly negative. We anticipate that turning in Q4 with the growth we have, the additional aircraft we've taken delivery of. Speaking of aircraft, here's our current fleet. We have 8 A320s, 2 A321s, 1 A319, and 3 A321 freighter for our cargo fleet. The unique part about our business model and unique to the Airbus family versus Boeing is our pilots can fly all 4 aircraft type. So we have one pilot group, which gives us economies of scale faster and efficiencies. And our pilots can fly across all the different platforms from one day to the next and do. When you look at our growth, and really our growth story is we've created a platform that allows us to generate revenue by adding aircraft and flying them. The growth is simply adding aircraft, hire pilots, add aircraft, hire pilots, and operate. I could say with definition, if I had 6 more aircraft today, they would all be sold. We are in that strong of a demand environment from the passenger side, and we are extremely excited about the opportunities we see coming through for us in 2024. When we look at where our passenger growth is coming from, our aircraft growth for next year, our goal is to get to 27. We doubled. We're going to effectively have doubled this year. We're not necessarily going to double next year, but it's significant growth. And keep in mind, each additional aircraft is a good proxy for revenue growth. So when you're thinking about the growth opportunities of the airline and the growth opportunities that we're presenting, as we add each aircraft, that adds revenue to the bottom line, revenue and then profit to the bottom line. Looking back to our outlook, again, we confirmed our 2023 revenue forecast of over 150 million. Over 95% of that is contracted. I believe that number is higher now. 17,000 hours were contracted for 2023 with the potential to contract another 1,800. This compares to last year of 10,000 hours contracted in 2022. So as we can see, the growth and the metric you're looking at is how many hours are we flying for aircraft and how many hours are we flying overall. And the more hours we fly, keeping in mind every hour we fly is profitable, generates a contribution margin, which will eventually cover your overhead. And then as you add aircraft, about 80 to 90% of that incremental revenue will drop to the bottom line. And I think that's what we're seeing. We're at that stage, that kind of point of really close to break even and growing forward. Our target fleet size by the end of the year is 12 passenger aircraft and 4 cargo. We're on track to take deliveries of those in December. And then we have significant deliveries in January and February for next year. One thing we like to also talk about is kind of the long-term vision. I think you might have saw an announcement yesterday about Urban X, which is the eVTOL program. Basically, Eve, which is the Embraer model of eVTOL, which is a takeoff and landing. It's basically effectively an air taxi kind of service. Keeping in mind the revenue for this is a little bit out. It's still going through certification. But as kind of a leading the pack within South Florida, we're really excited about our ability to participate and help shape that market in the years to come. So that's really part of our ESG initiatives and sort of our looking forward initiatives, and really is the expansion of our platform and additional revenue streams. The other aspect we talked about is the 50 electronic aviation Alice airplanes. They're 10-seaters. Their operating costs are a fraction of what a normal commuter aircraft would cost. Simply because it's electric, fuel being the biggest cost out there. And that, again, is something for the longer term portion of the company. Looking towards our cap structure, with the Axar financing, there is no pressing need for us to raise capital. I think there's always a concern on small cap companies like ourselves with high growth rates about dilution. With the Axar money raised, we have no need to raise capital. We think we can grow with what we have. If we were to uplist, not the OTC wants to hear about that. Our only real hurdle is having positive shareholder equity, and I think timing the market for when that makes sense. You want to be big enough when you're on the bigger board to really take advantage of the investors who invest in the big board, and we're getting closer and closer to being at that threshold. If you look at our cap structure, we have common, Class A, and Class B. Our Class A and Class B are non-voting shares. Our common are voting, but also the A and Bs can be converted to common, so we really treat them the same. We have 3 tranches of warrants that are outstanding to effectively 3 different groups, all expiring. So, a chunk expiring in March, and then the rest in 26, and the rest in June of 2030. We have about 5 million RSUs out. What we've done is a classic startup. We've had offered lower salaries and equity compensation. We also have an employee share purchase plan where employees will invest their payroll through payroll deductions, buying shares. We just closed a round of it. Employees bought, over 200 employees participated, purchasing about 500 shares. And I think that just goes to a testament of how the company and the employees in the company believe in the story and where we think we're going to go. So at that, I think that's the last question. Oh, poised to grow, the story. Effectively, to summarize, we believe we're we're in the right market dynamics. I think there's a shortage of aircraft to meet the demand that's out there. We have significant contracted revenues. So we have a mix of long, near, and short-term revenues to provide stability, but also it allows us to take advantage of opportunities as they arise. We'll be ramping up the freight business over the next 12 to 24 months. We think our aircraft is a differentiated aircraft, and we'll play quite nicely in that space. And again, fleet growth. We're anticipating to reach 50 aircraft by 2025. That's our goal. That's our target. But I think the idea is as we keep adding aircraft, as we go through that process, our revenue grows in proportion. So we're pretty excited about where this can go and the sheer size of what this can be, which is what we need to be in order to be a public company. So with that, I will thank you for your time, and I have a series of questions. So I'll just jump into the questions. So first question, I see that N630VA, which is the tail number for aircraft, was delivered to Miami on November 14th. When will it be in revenue service, and is 2-week plus time frame between delivery and in service what we should expect on future deliveries? I'm happy to say, as I said earlier, N630VA is in service. It went in service yesterday. I think 2 weeks is a little long. I think we lost a week because the FAA was on vacation for Thanksgiving, which probably cost us 5 to 6 days. They need to sign off on any additional aircraft that are added. So I think a week is probably more realistic. 2 weeks is on the long end, but it should not be longer than that. Please elaborate on the business model and vision for UrbanX Air. Will the risk you avoided for GlobalX by renting out the entire fleet, the entire plane affected? I think the UrbanX Air business model is really kind of still being developed. I think what role UrbanX will play, what role GlobalX will play in operating those aircraft is really still being determined. What we wanted to make sure is we had a seat at the table to help define the market. And I think we are at the table. We are leading the conversation. We're one of the few people involved who actually know how to operate aircraft, which is really, a lot of people involved in this process are either interested in vertiports or infrastructure. But we come to it from the perspective, okay, it's Monday. You've got 30 of these things. You've got 200 passengers. How are you going to move them? And we wanted to make sure we have a seat at the table. So that's really where we are on that. Next question is, what does it mean to be a 121 certified? So 121 refers to the FAA code, which governs the rules and regulations around how an airline operates. In the United States, there's 3 levels. There's what they call them parts, right? So it's Part 91, Part 135, and Part 121. Part 91 is someone who owns their own aircraft. They can only fly for themselves. A Part 135 is for smaller aircraft. Private jets operate under Part 135. It has to have less than 30 seats and be under a certain weight, and that's a second level of standards. Part 121, which is what we operate under, allows you to operate everything from a 737 or A320 all the way up to an A380. So it allows you to operate the big aircraft. It's significant because it's the hardest certification to get. It's the most stringent certification. It's a very arduous process, and it's a differentiator. Is you just have to have this to play in this field. And the idea of generally it takes 2 to 4 years to get these certified. I think nowadays with the FAA staffing levels, it's probably 5 to 6 years to get it certified. We managed to do it during the pandemic in about 11 months, which is almost a record speed. But we believe it's a differentiator for us, and it's really the license that allows us to operate. So that's what makes it so critical. Can you elaborate on the details of the $35 million debt facility you recently received? Yes, so it's effectively an interest-only 6-year note. Interest is payable every 6 months. It was interest, so debt at 15% plus warrants, which were the 10 million warrants that you saw on the screen. The advantage of this for our perspective is it made our balance sheet significantly stronger from where it was before, but it provides us the cash to really go grow the airline. To put everything in perspective, up till August, we were about 500 employees and 10 aircraft, and we had created all of that from scratch with around $22 million of capital invested. This amount of money allows us to expand the fleet. Next question is, can you speak to the economics of expanding your fleet by lease capital position to support your growth? So to date, we've leased all aircraft because it requires less capital, and we've wanted to use our capital to grow the airline versus acquire aircraft. I think if we were to, when you think about the economics of it, the rough order of magnitude of math, it's around $1 million per leased aircraft of capital, working capital, and deposits required to bring an aircraft on the certificate. Whereas if you were to purchase an aircraft, even if you did it with debt, you're probably looking at $3 to $5 million of working capital required to bring it on. So to date, we've elected to do it all on a lease basis. We'll probably do that for the foreseeable future, but as we get stronger and our cash flow becomes bigger, where our cost of debt starts to drop, it makes sense to look at perhaps purchasing aircraft to have a little more control over it. Next question: what risks to your business do you see ahead? I think from our perspective, we see a lot of opportunities in the sense of there's a lot of shortages, and there's a lack of supply of aircraft, and demand is very, very strong. Obviously, if demand drops off, that could be an issue. The way we mitigate that is really by focusing on clients who are going to fly, whether, if you're really focused on vacation and family or business travel, that tends to be impacted by the economic situation. But when you're flying sports teams or you're flying for the US government, those missions are happening regardless. And so the way we've tried to address it, to ensure we're flying enough hours to cover our cost and to generate a profit, is to really focus on customers that are across multiple platforms. Next question: how do you plan improving your EBITDA, and when are you expecting to see it on the profitable side? So the simple goal for improving our EBITDA is adding aircraft. So if an aircraft can contribute $200,000 to $300,000 of operating margin per month, with each additional aircraft, I think beyond where we're at now, most of that would go to EBITDA, and that's really that's the goal, is just to add aircraft. I think we'll be close to profitable in Q4. We were really close in Q3. Being as small as we are, it can take one or two events that can have a negative impact. But I think going into next year, we're extremely positive, not to be pun intended, with the aircraft as they get delivered to be able to hit those thresholds that we're talking to hit. Sorry. Next question: when do you expect to add your first A330 passenger aircraft? How many A330s do you plan to add in your fleet? The A330 we've talked about for 2024. I think from our perspective as a company, we are growing so fast and we see so many opportunities with our existing aircraft. We're not in a rush to add 330s. I think the 330, whether it happens at the end of this year or next year, or 24 or in 25, it's probably more likely to do 25, just because we see so much near-term opportunity with our existing aircraft and just adding that aircraft type. It's a lot of work to add an aircraft type to the certificate. It's kind of definitely going on in the background, but it's not a key priority for us, and a key priority for us going forward. Can you share revenue guidance for 24? We haven't shared any revenue guidance yet for 24, but we have shared aircraft guidance. And I think if you were to look at revenue per aircraft in 23, and you looked at how it played out in 24, and you see what the aircraft, how many aircraft we're planning to have in 24 or 23, and how many have in 24, it'll give you a pretty good proxy for where it is. And I think on the next earnings call, when we release our 23 full year earnings, we'll give an updated guidance on 24 revenue. And then I think, some more questions. Aircraft, 50 aircraft by year end 25 or 39. I think 50 is the goal. I think 39 is probably more realistic. Both of those are sniffing at multiples of where we are today. But I think that's a good catch on there. I think we've been talking about 50 as a goal. 39 is sort of like a base, and then the 50 would be a target. Will the MRO be financed with $35 million debt, or will it be separate? It's separate. Basically, it's a build to suit, and we lease it back. So the $35 million has nothing to do with it. It would be built into our lease expense. So how many shares of GlobalX employees purchased? I believe you said 500. It was 500,000. So yeah, not 500, 500,000 across 200 employees. There's a cap on how many they can buy in any one program, and that's it. Do you believe the average utilization of your charter aircraft will increase in the following years? Yes, our goal is to increase it to around 140 hours a month per aircraft on average over the course of 12 months, and we think we'll be able to address that. With that, I think I've got to 15 seconds left. I don't think there's any more questions. I want to thank everybody for joining us. If you have any other questions, my contact information is in the bio, and I look forward to hearing from you.